Hey there, here I am, a man on your scene. I can get what you want, but you come home. All right, just trying to get myself in a good mood. Boo-hoo. Bill Gates, I want all my money back. Anyways, hey, good morning, everybody. It's a Friday. June 15th, 2018, daily Forex trading strategy session brought to you by TradersWay.com. Let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is McDonell. I am the Chief FX Market Strategist for TradersWay.com. I am here to help you build trade plans. Hang on. With the overriding goal of helping you become an independent, thinking, planning, strategizing trader that is profitable, conservative, and disciplined. You shouldn't have to listen to anybody. You should be able to do your own analysis and come up with your own plans, make your own trading, and spend your money the way you want to spend it. We do these sessions 7:30 in the morning, Monday through Friday. And what else? Hey, well, thank you for being a client. We appreciate you. If you haven't joined the family, please visit TradersWay.com. Open up a demo account. Take you less than 30 seconds, and you can do things like test our execution speed, check out our spreads, or if you prefer an ECN account, go ahead and get an ECN account. And then what? Then, if you want, check out our customer service. I think you'll find it world class. So once again, thank you for being a client. All right, we should have pretty little colors. I'm in my travel setup, so you probably see my drawing tool. You notice anything behind me? Yeah, they're back. They're not plugged in. But let me tell you, that's not an easy thing to move around. Cool. So anyways, so happy. Oops. All right, so without further ado, let's just bust through this. I have a travel setup. About 6 minutes before the webinar started, my USB port blew out, and I don't have my external monitors, so I got everything crammed onto one lousy screen. Okay, so I apologize for that. I guess I have to go spend some more money. Yay! Have someone tinker with this. All right. Right, quite right. Let's just, let's start with it. I'm still tracking Noki. Remember, this had to do with Brent. Somebody asked me questions about Brent and how that was related to WTI and all that kind of stuff. And so we were saying, hey, if you're trading Brent crude, you might want to watch Noki. Norwegian krone. This is where we are currently. This was on the first of the month, potential buy, which failed. So therefore it was the drop, pullback. This was the potential sell. It dropped down to this support pivot, right? Random coincidence. Dropped down to the support pivot and then took off after the bad euro stuff. Remember, it's not necessarily strong dollar. It's bad euro. And how does that affect Norway? Well, it's just everyone in Europe is moving their money to dollars instead of euros. So that creates a strong dollar, but not necessarily the strong dollar that is important. It's really the weak euro. So like I said before the big announcement yesterday, I expected the ECB to do less for longer, and then they announced, no, we're not going to taper from 30 billion a month to zero, which would be the end of quantitative easing. No, we're going to taper down to 15 billion per month till the end of the year, which is less for longer. I'm like, oh, I didn't actually expect it. I'm just threw it out there. I'm like, yeah, well, less for longer sounds like something that the ECB would do. And they actually did that. I'm like, whoa. Okay. So anyway, so this is where we are now. But hey, if you were burr naked, being up near this monthly central pivot is kind of interesting, isn't it? Okay, it's kind of interesting. Maybe you're thinking about shorting, and if you're a bull, you kind of want it to drop back down into this area. Okay, and maybe buy off the 4-hour 21, which is actually going to be lower than that. So down into there. Okay. Yeah, Mercer's good call. You know, this is dumb luck on that one. But it's funny because I did laugh when Draghi said, I don't know, what was it, a year ago, that they were going to do less for longer. And it's like one of those double negative things. I don't even know what that means. Does that mean a double negative means positive, right? So a lot of times I have to stop and translate, you know, like, what? So less for longer, am I, what? So I think it's a purely European concept of doing less for longer. So anyways, I threw it out there yesterday, and guess what? They did that. Cool. All right. So anyways, the strong dollar versus Norway, and this may not actually reflect the value of the Norwegian crown. It may not reflect the value of Brent crude oil from the North Sea. It just might be strong dollar, and it might not even reflect the dollar per se. But what does it show you? Like, why would a European move their money out of Europe? Well, the U.S., you know, those 10-year T-notes, man, paying 3%. Pretty hardcore stuff. I mean, that's really attractive when you're getting zero over in Europe, right? So about, let me guess, 3 weeks ago, the 10-year T-note was paying 3.1. Then it was 3.0. Then it was 2.97. Then it was 2.95. And now it's 2.92. Okay? What's happening? What's happening, guys? How does that happen? Yeah, Stone says increased demand, decrease in yield. It means Europeans are probably buying, because we don't know who's buying, but let's just say after 6 weeks of dismal economic data. Remember, prior to the most recent 6 weeks, Europe had actually really good data, and we're like, oh my gosh, the economic problems of Europe are over. Yeah. But Europe has decided over the last 6 weeks to suck. And then, you know, the ECB's policy change reflects that. Now, bear in mind, at the same time, the United States is probably building a 4.5% GDP for the second quarter, and Europe is going to get like nothing. Hassan says some economic books. I haven't bought too many, Hassan, economics books. When Ben Bernanke became chairperson, man, it's amazing. I keep saying chairperson, right? Chairman. I'm allowed to say chairman now. Chairman of the Federal Reserve. I'm like, really? Who's this guy? So I went out and bought his textbooks that he used to teach at Princeton with. But he's co-author of these textbooks, and then he wrote a couple of books on the Great Depression, because that's what his expertise was in. So I bought some of those. So I bought some books from Ben Bernanke. And what else? Studied for the Series 3, like I mentioned the other day, and I passed that test. And what else? I took classes. I've taken many economics and finance classes at Harvard. I recommend that. Right? So like this summer I am studying Islamic finance and banking. Cool. You know, right? And so that one class is 16 weeks worth of work, which means there's 3 hours of lecture per week, which will require probably 10 hours worth of study and homework. But I take 2 classes, right, every semester, which means I do, 6 hours a week of classes and 20 hours a week minimum of homework. But the problem is I'm a slow worker because I can't memorize. I can only try to understand. So yeah, I spend a full-time job just going to Harvard and then doing all my other things. But you could do that. Go to university. Right? That's probably the better way of doing it, Hassan. Yeah. Try international economics. Yeah. So I don't know his book, but anyways, yeah, maybe. I mean, I like it. I like that better. Taking classes. There's tons of stuff you. But anyways, there you go. I'm sorry that wasn't very helpful, but I haven't read anyone else's books. So, all right, going back to this. Yeah, you told me about that one. It's interesting. I read like, what have I read? The Prince by Machiavelli, stuff like that. Um, I studied the last 1,200 years of economics. I studied the entire oil industry from its inception. Right? I've done macroeconomics, intermediate macroeconomics, finance, international political economics. Okay. If you were a bear, are you still okay with this? Remember, you might have been a bear at the beginning of the month, right? So when I do my monthly swing trades, right? When I do my monthly swing trades, I was a bear. This was a very obvious open. So you can still be a bear, couldn't you? Yeah. But a lot of newer traders forget that. They get caught up in what happened yesterday, and they're blinded by it. Okay. But I still think whoever thought, this was the long-term trend, they're probably still thinking about that. Okay. The other way of looking at it too is this is printed a bottom. We could just be range bound too, right? So remember how I teach you to trade. If you're a bear, you would want to sell here or you'd want to sell here. right? Then you don't have to worry about all the noise. If you're a bull, is this a good place to buy? Okay. So then you have to ask yourself as a bull, how do you get into this? And I would say as a bull, I would look for, like that. That's your most aggressive move. Your second move would be this, right? Assuming it fell all the way down, right? It'd actually come down slightly more than that, but those are the plans, right? Okay, I'll buy off that or buy off that. Sell off that or sell off that. Hey, right? Those are called trade plans. That's not so bad, right? So, oops. So that's a lot on that one currency pair, and you're probably not even trading it. So why do that? Well, we're talking about technical analysis. Okay. Is this a good place to buy the USD CAD? Hey, the US dollar is ripper strong. What do you think? Was that your plan at the beginning of the week or at the beginning of the month? You're like, yeah, I want to wait. I don't have any glasses. I don't have glasses. No, I must have moved them. I was reading outside. Anyways, you wouldn't have said the last day of the month. So put it this way. With the swing trading group, May 30th, I think it was, there was a, hey, if you were a bull on USD CAD, you would want to buy it down here. This is what we said at the 30th of May. I did it 2 days before the end of the month, right? Not the 31st. I did it on the 30th. And I said, if you're a bull, you'd buy it there, and this would be your target for the month. Isn't that nice to know that before June even was printed? That you're like, yeah, it's going to go up to like, what is that, 131.50? Yeah, it's going to go up to 131.50. See, it's actually higher than that. I can't quite see 131.75. No, 131.57. I don't know. Maybe to 132. How about that? But that's cool though, right? You're like, yeah, buy it at 28, go for 32. Yeah, it's only 350 to 400 pips, but probably not your only trade. That's nice though, right? If you're a bull and you didn't front run the monthly pivots, why can't I draw here? Okay. Then your entry would have been here or here or here or here. Okay. These are all potential entries. Because this one might have knocked you out, right? So you climb back onto the horse, whatever. Okay? But that's the benefit of trading with a bias. If you're a bull, you know that this is a buy. If you're a bull, you know this is a buy. Okay? The interesting thing, even if you're a bull, you know your vulnerability. Where are the bears going to be? Where are your long trades vulnerable? Here, 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 and that's it, right? Well, and now here, right? So you know to maybe move your stop. And when you're up here, trade it like a breakout. It's supposed to do this, right? So this might have taken you out here or here or here or here or here or here or here. You probably moved your stop if you longer, or if you longed here. You probably got knocked out there. You might have made a little bit of money. You might have broke even. You might have lost a little money, but it would have been uneventful, right? So what do you do again? Well, you try a second time. Oh, still hasn't broken down. I'll try a third time. But you know, if you're a bull, you know your lines. And you're like, oh, now we're vulnerable again. Oh, but isn't that cool? Brooks says I tried short 3 times. That's awesome, because these vulnerable points are where you should be selling. Okay, here's your Monday shorts. Here's your Tuesday short. Here's your Wednesday short. Right? Wait, that's actually Friday by then. And then this week, where is it this week? Well, the monthly is still there. Yeah, it's basically the same thing, right? You can also see it's not amazingly bearish. I mean, you're not really kicking off the right pivots. Like, look at this. I don't really recommend you using the resistance pivot as resistance, do I? But I can see you doing it. This is the top of the market, and you took some shots. It's fine. And if bulls did what they did, they probably ended up making money. And if bears did what they did, they probably didn't make money, but probably didn't lose a whole lot either, because it's not surprising, right? But you have to have a bias. Therefore, you know you have a plan. Now, for people that don't trade with biases, what do? They didn't expect this to happen, so they buy up in here, and then it dropped, and then, you know, whatever. And you're always going to be late, and you're always going to be early, and you're always going to be late. You're always going to be early, and you're in this kind of this area. And whether the market turns bullish or bearish, those traders typically lose money, because they end up buying sort of like up in here. But that's a bearish move. So, right? So they're either early, if they're buying here, they're late, right? Yeah, well, they're just late. So whatever, I don't know. It's hard. I look at that and like, who buys that? But you know people who buy up in here, right? You've run into them. They're on this chart somewhere, or this chart somewhere. So anyways, is anyone going to sell this up here? No? Why not? Don't you expect bulls to take profit? I mean, I don't know what's right, but I'm just telling you, this is by definition resistance, right? Yeah, Freddie Boy's already got it. But this is a weekly R2, which is good, right? Whoever said weekly R2. Yeah, Rod says, yeah, weekly R2. But it's also monthly M4. So this is like a mega cluster of resistance, right? This is like the big weekly resistance. And monthly M4 is the conservative target for the month of June. It's by definition where traders that are swing trading on a monthly basis are supposed to start getting out. Well, the Fed meeting's over, the ECB's meeting is over. It's Friday. If the weather's nice in London, they're going to go home early. They're going to go to the pubs and talk to the pretty ladies and go. I don't know where the London boys go on the weekends in the summer, but you know, the New Yorkers, or they're going to go to the Hamptons, or they're like, I'm out of here. They're getting in their helicopters. I remember one time I'm on Wall Street, waiting for my helicopter. It's landing. It's actually hovering. Like, this is cool, man. I'm on Wall Street waiting for my helicopter. It's Friday afternoon. I had to get back to JFK. Who takes car service on a Friday afternoon, right? So anyway, so I'm waiting for my helicopter. It's coming down. And then some other guy, his helicopter just landed, and he's walking over to get in, and he looks at me, and I look at him, and I give him like, hey, what's up? He's in his $1,000 suit. I'm only in my $600 suit. But anyways, he's like, what's up? What's up? So he gets in his black helicopter. Off he goes. I'm thinking he's off to the Hamptons and everything. Right? And I'm just off to the Delta terminal at JFK. But look, suck. Right? But, you know, that's what people do Friday afternoon in the summer. They get in their helicopter, and in 30 minutes, they're in the Hamptons. If you get in your car in 3 minutes, you're still in the city. You haven't even got out of a tunnel yet. So anyways, you know, people just might bail on this because they're like, you know what, I'm done. It's summer. I'm going to the pub. This thing just goes. I miss New York. I used to go all the time. I miss New York. New York. All right. New York. Euro dollar. If I can make it there, I can make it anywhere. Look at that, huh? Oh, snap. Amazing coincidence on the bottom of this move, right? Oops. Amazing coincidence, right? This is the weekly S2. That is the projected low for the week. And if you were a bear and you saw this last Thursday and you said, because of that, you're a bear, Monday's entry is here. So if you took that, you might just be crying a river, right? Because your stop might have been before this. But if you shorted on Monday, your target was here, by the way. Right? Boy, you'd be kicking tires if you got knocked out on that, huh? So anyways, if you were a bear on Monday, like, do you remember even drawing all of this downward channel? I think you do. I think we did that 2 days ago, right? But boy, you'd be kicking and screaming if you got knocked out, and then it did that. Yeah, so after the news came out, just to review yesterday if you were not here, I very calmly talked about the additional 45 billion, because it's 15 billion September, or September, October, November, December. No, October, November, December. So anyways, it's an additional 45 billion. that the ECB said that they are going to buy, right? That they're going to buy in bonds and other assets. And I talked about how when you look at the supply and demand curve, that's demand, and this is supply. We're now talking about if the ECB buys 45 billion in bonds, that means the ECB puts 45 billion in bonds on their asset sheet, but they also give the bond dealer 45 billion in cash. So, but that money wasn't in the banking system. It wasn't in the pockets of the population, right? It was created by these, not printed, okay, but created. So therefore, money supply goes up 45 billion, okay, and that moves supply to the right, okay. So now you get S2, this is S supply 1 versus supply 2. And what that does is it changes the price or the value, purchasing power, let's say, of the euro from value 1 down to value 2. Okay? So that's what we talked about after. But we also talked about the fractional banking system and how that affects it. So the bank has now, the bond dealer now has 45 billion in cash received from the ECB in exchange for those 45 billion in bonds. So now ECB has the bonds. So now the bond dealer has 45 billion in cash. They put it in their bank account. 20% gets put at the ECB. Everything else is lended out by the bank. So someone borrows money from their bank. So the bank gives them the loan. They go out, spend the money on the loan, so they get an asset and someone gets the money, and then they take their money and put it in a bank. 20% goes to the ECB. The other part gets lent out over and 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 over until the last euro is loaned out by a bank somewhere. And the money supply is actually based on the formula 1 over the R plus E. Okay? Based on this formula, by the time the whole fractional reserve banking system works magic, the euro has actually increased. The money supply of the euro has actually increased by 450 billion euros. That's what the consequence of the new ECB policy has on the money supply, right, of the euro. And then you say, well, if this lowered, this was only by the increase of 45 billion. So if the reserve banking system actually increases the money supply of euro by 450 billion, this will actually probably shift out more like S3 because it's had time to work its way through the system. So it didn't shift by 45 billion, it shifted by 450 billion, which now gets you down here. And you're at V3 now. The value of the euro has fallen even further over time as the money trickles into the real economy. So as I explained using a graph, the euro weakens. That would be true for every currency in the world except one. Which currency would that be? Yeah. And the big difference is, like, if you can isolate the dollar, that might be one thing. It may actually behave in maybe a more textbook way. But because the U.S. is the largest economy in the world, and because the whole world uses U.S. dollars for business transactions and buying commodities and stuff, the dollar is different. And typically, if the U.S. is in trouble, everyone's in trouble, right? What do they say? When the United States sneezes, China catches a cold. But that could also be Japan. For example, Japan could get a cold. the United States sneezes. And what that means is if the whole world is in trouble, the US dollar goes up in value. Yeah, so Lester, he says, Wayne, a while back you spoke about buying the bond market before yeah, but not, you're talking years ago, right? So the thing you should be doing now, if you're a bond trader, you know, well, there's different ways to trade the bonds. So let's just say if you're truly a trader, you could certainly be a bear, and you might also be a bear like for the next 10 years. So ask yourself this, Lester. Do you think interest rates will be higher 1 year from now than they are today? Do you think they'll be higher 3 years from now than they are today? Okay. So if you're saying yes, then you have to ask yourself, well, how much higher? But if you believe interest rates are going up, that means the bond market is falling. It is. It is falling. That's what makes interest rates go up. We also talked about that yesterday. It's not the Fed going, yeah, we think it should be 3.5%, so it's law now. The U.S. government mandates, right? The judicial system of the judicial branch of the United States makes it law that in the United States interest rates are 3.5%. No. You get interest rates. It's a Fed funds target rate because the Fed, not the judicial branch, not the executive branch, right? The Fed goes into the open market, conducts open market operations, which is fancy words for saying they buy and sell bonds. So you buy, if you sell bonds, interest rates go up. If you buy bonds, interest rates go down. Cool. So the Fed is in the market selling bonds. So Lester, you could say, I want to be a bond trader too. And if the Fed's selling bonds, well, maybe I should sell bonds too. That's one strategy. Okay, that's just one strategy. Now you can also buy bonds and hold till maturity. You can even buy bonds at a discount. If you have some money, or if you have some credit, so like if you go to a bank and say, I would like to borrow $100 million, you can buy bonds at a discount. Now, 100 million is really not a lot of money. That's pretty small. But if you can get a couple of million, 500 million, then yeah, you can actually buy a bond. Let's say it's trading at 100% of its face value. You can buy it for probably less than 90. You buy it for 88, for example. Plus get the coupon, plus when it comes to maturity, you make money on top of that, but you have to buy hundreds of millions at a time. Yeah, Barry says 100 million is your goal. So that's really small money. But typically, if you're going to buy a fresh cut bond discount, you're going to need cash. So you're going to need 100 million cash. So if you're going to buy 100 million on cash, you better have more than $100 million, right? No, not treasuries, bonds, Leslie. Bonds. But anyways, we don't need to. But, there are many different strategies. But generally, bond houses have big money, right? So get some big money. But like if you're a wealth manager with 100 million, you're a chump. You've probably only been in the business for 5 years or something. Even a small wealth management team has 300 million, and that's like chump change, small town stuff. So to have 100, so 100 million is not a lot. So anyways, is anyone going to trade this? Right? But you know what they say, Barry? The first 100 million is always the hardest. The son says, I'm afraid, I'm scared of US dollar strength. Well, you shouldn't be. Just what's your plan? What are you going to do next week? Okay, so I'm getting with the swing trading group soon after this, and we're going to plan out next week. There's no fear, right? And if you get it wrong, you get stopped out and you lose some money, but it's such a little bit of money because you're not over leveraged. Then you're like, well, bam, what am I going to do? Right? But if you're a bear, you sell high, so find your price. And if you're a bull, you kind of have to start thinking about it around the double bottom, right? So that might be good in there. If you're a bull, I'm not saying you should be a bull. I'm just saying if you're a bull, you kind of have to play this. If you're not a bull, right? If you're a bull and you're not playing that, then I'm not sure what you're looking for. Maybe you're gonna do this stuff, but then you're not even gonna get a trade till Monday afternoon, right? So what I prefer to do, if you're gonna take a shot as close to the actual support. And you're saying, well, is this the support? Well, I look at what's going on this week and I say, well, good enough, right? So if you're going to do it, I like to put it there and then have a stop close. And if it collapses, that's fine. But if it goes up, you can move your stop pretty quickly to near break even or to break even, right? And play the double bottom. And then maybe you get another chance to play a higher low on Monday or Tuesday or something. But you kind of have to do your job, right? So if you're a bull, this is where bears are supposed to get out. So you should be in there somewhere. You should be in there, right? Jam your stop. But right, this is a 4H, guys. So you had 12 to 16 hours to do this. Okay. So I'm saying, you could have a plan. You could have worked your way into it. Now, if you looked at it and said, I'm not interested in that, awesome. That's valid. Gold. Somebody said they shorted gold yesterday. Right? Really? You look how obvious this was at, I can't see that, sorry, I don't have my glasses. What is it, 13.10? 13.8? 13.06? But obvious, right? If you're a bear, what more could you possibly be looking for? Wayne, I was looking for 3 pregnant nuns before I took that trade. That's my favorite reversal trade. Okay, this is where bulls would have bought on Monday. This was their target on Monday. Okay. Now, and I'm not sure if this was but we did something like this on a different pair. If you were bear on Monday, right, you would have said, I'm interested in selling here, and I'm interested in selling here. Right? How many people can confirm that they know that? But that could have been like your plan on Monday. and that I don't really have any other plans that I would have done, right? Like you're like, yeah, that's very Wayne-ish. That's got Wayne all over. So if you're a bear, you're like, yeah, that kind of worked out a little bit, and then I got knocked out. Then I tried again, it worked out a little bit, and then I got knocked out. Now the interesting thing is, where would a bear assume vulnerability? If they shorted here, they're like, yeah, I'm vulnerable right about there. Right about here, I'm super vulnerable. Meaning you expect a high probability of this rising because you know bulls are there. You know bulls are there. To put it a different way, where else would the bulls be? Right? So you know when you're down there, you should probably move your stop. If your stop was here, move your stop to break even. 12 hours later, you get knocked out of break even. So you take another shot and it falls back down. You're like, ooh, I'm vulnerable. I should move my stop to break even. And that's how trading is. Then it blows right through and you're like, oh man, well, I'll try again up here. And you take this one and you're like, aha, I'm the greatest trader in the whole world. Well, except you broke even here and you broke even here. Well, that happens, right? It's like building a castle in a swamp. They said I was daft to build a castle in a swamp, but I built it anyways. But it sank. Right? So I built a second castle, and it fell down and sank into the swamp. But the third one, the third castle, it held. And one day, son, all of this will be yours. What? The curtains? Right? Soon you will marry a very influential, very rich woman, but I don't like her. You guys know what I'm talking about? What do you mean you don't like her? She's got huge tracts of land. Everyone's like, oh my God. Yeah, we don't watch movies like that in the convent. Yeah. Yeah, one of the greatest movies ever made. The Quest for the Holy Grail. You have no idea what I'm talking about, dude. Amazing. So here's a fun exercise, right? We did this last week. Look at drop down, pop, drop down, pop, drop down, pop, drop down, pop. Based on Jules. The story of Sir Lancelot is a true story. So anyways, we did this last week, guys. This was old support, this was old support, this was old support. I drew it out, and I'm like, just observe and watch. Right? That's all I said. Observe and watch. These price levels just simply could be important in the future. So anyways, that was as it was walking up. These are step ups if you're a bull, right? Down, right, up, 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 down, down, up, 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 down, down, up, 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 up. Then what? Down, hit the gray zone, up. Down, hit the other gray zone, up. Down, hit the other gray zone, up. Down, you could argue this one, right? And then down, you could argue this one. You see why I say things like the most important thing you need to learn in trading is price action and then the use of pivot points. Everything else is nonsense. You can use whatever you want on top of that, but if you don't know how to trade price action and you cannot predict what's going to happen next week or next month, you're not going to be consistent. How could you trade if you can't predict the future? So there's two things, right? You have to look at the past, but then you have to predict the future. Price action is past, right? Pivot points are future. But isn't that amazing how important that was? And when I drew it, you probably didn't know. Like, yeah, what's he doing? I think that's amazing how important that ended up being. Right, here's the top. Oops, I meant to make that one, right? But that's really what it was. And then you drag this one across. I mean, it's just ridiculous. Right, drag this one across. Oops, trying to make it as close as possible. Trying to make this as legit. And then I have this gray because it's on some other one, right? Yeah, but it's very, 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 very important. Okay. So remember how I described trading Forex to like strangers. They're like, once they find out I'm a currency trader, they're like, oh, what is that like? I said, well, you have to know everything globally, and then accurately predict the future every single day. But besides that, it's pretty easy. Right? Right? All of a sudden, you're in polite conversation at the barbecue. You're like, so are you guys following the Italian elections? Woo! They're like, what? Yeah. You know, Berlusconi. What do you think about Berlusconi, that rascal? Hey, does he play for the Falcons? No, Berlusconi doesn't play for the Atlanta Falcons. No. Does he play for the Georgia Bulldogs? No. But he has a hot wife. Thank you, Nikki. Yeah. Well, who's he play for then? Yeah. So yeah. Someone keeps asking for USD yen, right? You know, I am here with you. There you go, Hassan. By the way, I think we're almost out of coupon codes. Quite a few people said they were going to sign up and didn't. So they're going to expire. Yeah. Well, it's all right. So, yeah, Ming, I think it's at least 6 months, but it might be like 9 months or a year. I can't remember. We changed it earlier. Yeah, Craig, I sent out an email, and we discussed it yesterday. We're talking like at the end of yesterday's webinar. I can't even remember how we got onto it, but I'm like, would would you want a coupon code for summer school at FX Bootcamp? And so it's already 55% off, but I did like a sale. So the next 10 people that sign up receive another $400 off, even though it's already 55% off. So it drops it down to like, I don't know, 70% off or something. I don't know. So, right. So you just go to FX Bootcamp. I think currently it's called Bundles course. The coupon code is capital SUMMER 999. But it only works 10 times. So I don't know, there's probably only 2 or 3 left. So it's 55% off plus $400 off that. Oops, I lost the video. So anyways, so I'm just a courtesy reminder, if you're going to sign up, otherwise you snooze, you lose, right? All right, so let's take a look at this sucker. No, it's right there, Lady Cash. Summer 999, capital S. Summer 999. Yeah, Craig's quoting the email. Oh, I know what Barry's saying. Is there a winter school? You know what? I've never done that, but I might move to Cambridge this winter. And that's typically when I do it. If I'm not around, that's when I do things. Because it's kind of like a surrogate Wayne. I'm not going to be around for 3 weeks coming up soon because I'll be living in Cambridge. So if I'm not around, and the markets are quiet because it's late June, early July, then maybe use this time to go through all the video training courses. Because even if you went for a day, it wouldn't be enough to finish. So it's coming up. I leave the 23rd. And I'm back like middle of July. So Barry says I'll be purchasing the fundamentals course, but I think it's the same price to buy everything, Barry. If you use that coupon code, you get everything, the scalp, the swing, the basic training, the fundamentals, whatever else is in there. But, so whatever. I didn't mean to make it a sales pitch. All right. So this is USD yen. Okay. What is this? This whole area right here is the predicted top for the week. Now it went a little higher. Yeah, but we had that crazy news, right? What do you call that? Yeah, so next week. Well, yeah, so next week I'm doing Monday and Tuesday from Orlando, but I'm bringing you with me. Okay. Yeah. Okay, I call that a lower low, guys, relative to this low. So another way of marking it is you can mark it like this, okay? And then however you want it. Let's say at least like that, okay? So once you have a lower low, what do I do next? It doesn't have to be a crown pattern. To me, it's just a lower low in an uptrend. Fib, okay, what else? Lower high, but where? Roll reversal is a better answer. I like that. See, a fib could be anything, right? Roll reversal I like better as an answer because it's assuming resistance. What used to be support is now resistance, right? Or just resistance in general. Okay, would you call this area resistance because of the way price action worked? Yeah. Would you call weekly R2 resistance, which is here? Yeah. Oh, for sure. Would you call this monthly pivot resistance? Okay. And then there's a psychological level up here, 111. It's just off screen, but it's probably bothering somebody somehow psychologically. Don't you think? It's supposed to be 111. Okay, it's sort of out there. So it's just simply resistance, and you're looking for retracement back to resistance. So the plan would be sell near resistance. Oh, and I forgot, then the shoulder. If you're going to do the crown pattern, okay, the shoulder. Okay, so that's what? 1, 2, 3, 4 reasons to sell. Okay, cool. So you're either going to sell around here or you're going to sell up here. And you prefer, obviously, the one down here. Okay. Any other questions? Yeah. Where's support? See, trading, guys, gets easier and easier and easier. You just got to ask yourself basic questions. Where is the support if you're a bull? See, on that other currency pair where I took support, well, let me do this. On that other pair, I forget which one it was, but I took old support and I dragged it across, took old support, dragged it across, took old support, dragged it across. And when it was an uptrend, you notice on the downtrend, it used those same levels. On the downtrend, it used the same levels as the uptrend. What I'm trying to get to across is that you constantly identify support and resistance. It is your job, right? You're like, this might be important in the future. This might be important in the future, right? This might be important in the future. Oh, yeah. This might be important in the future. Oh, this might be important in the future. Oh, this might be important, right? And you're just doing this over and over and over again. Okay? But you're doing it way to the left. This was important in the future. But even before that, you said this, right? This area might be important in the future. Well, it was important here, it was important here, and it was important here. There was a little double here. And it might be important here if we fell. What about this? That was important over and over and over again, right? But probably important here. It was important here. It was important here. It's important now, right? This was important. This was important. This played a role here. This was a top and top and top and top. Then it broke, dropped. Now, you know, someone could have sold here. You see? This is clearly important. This back here was important, then it was important again, and it was important again. Probably will be important again. All of this, right? And if we get all the way down here, this kind of stuff's going to be important. This is an old area here, and oops. You know what I mean? And it's your job just over and 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 over. You're a bull. Give me the next 2 levels of support. You're a bear. Give me the next 2 levels of resistance. Everything else is not that important. Right? It's 95% of all stop losses are within 30 pips of where we are now. I'm looking out my window. I can see like 100 geese. All right, so I got to jump, babe. It was real. Swing trading group, you want to meet in an hour? 9:30, swing traders? Okay. And by the way, everyone that is signing up for the summer school, I'm going to copy all the last, like, I don't know what it was, 12 weeks that I've been doing the live swing trading group. I'm going to transfer all those videos over to the swing trading course. You can just get more and 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 more examples of how we're doing this. And then whoever does this, the swing trading course in September, when I start the new swing trading group, then you can join that group where we get together live and set up next week's and next month's trades together as a group. But people can only get into that group if they've gone through the swing trading course. So that's one benefit of the bundle anyways. All right, I got to jump, babe. It was real. Thank you very much for being a client of TradersWay. We appreciate you. If you haven't done so yet, please visit TradersWay.com. It's super, super, super important, especially if you want to keep these daily get-togethers going. It's sort of your social obligation to visit TradersWay.com and open an account. But I know how hard this gig is. Let me tell you, Forex is worth it. It's absolutely worth it. As you probably know, I've reviewed thousands of business plans, and this is the business I chose for myself. And 15 years is a long time to be doing something. It's worth the effort. Murray says, account is open now. Well, maybe one day you'll be a portfolio manager, huh? Yeah, that's where I bumped your $5,000 account up to a $25,000 account. It's helpful. So anyways, I'll see you guys Monday from Orlando, Florida. Yep, and except for the swing trader guys, I'll see you in half an hour over in the swing trading room. Guys, peace on earth. May the pips be with you. May our profits be above average. Cheers.